Still we're getting closer to the 6,000 round number. We're about 60 points away. And the question is, are we going to reach the 6,000 round number, or are we going to pull back first? I think we might get closer to the round number, maybe within 20 points or 30, but then we may have to pull back. This is getting extreme, and that increases the odds that the market will probably get a pullback lasting at least a couple of legs. So I think we're probably going to pull back on the daily chart. 60-minute chart. We came really close to touching the moving average, but we failed to reach it. And that increases the chances that we'll probably have to come down and touch the moving average sometime soon. But obviously, 6,000 is getting close. And on the 5-minute chart, we had a broad bear channel coming into the day. And the bulls, they found buyers after 2 legs down, bar 2 and 4, and they found buyers on the close of 4 and open of 5, and the market reversed up, forming a wedge bottom. Nesta within a larger wedge bottom here. Bulls, they got a decent reversal up on 7, strong enough breakout, probably going to go at least a little bit higher. And then 8 formed a bear. 8 formed a bear reversal bar, strong enough bar, probably at least second leg down likely. 9, a bull bar, but after the sell-off from the 7 high to the 9 low, I suspect sellers above in the second leg down. 10, another tail below the bar, but in a bull bar, but probably not a good buy. Increases the odds of sellers above, even if we go above the 7 high. And then 11, bull bar, but small body, probably a second leg down, likely. 12, good bar for the bears, probably going to fall at least a little bit lower, and I suspect we'll probably get below the 4 low. 13, a weak entry bar for the bulls, for the bears, and 2 legs down after 9 and 13, and therefore the bears may get disappointed and we may get a reversal up on 14 or 15. 14, not a strong bar for the bulls. Let me fix this. Not a strong bar for the bulls, but 2 legs down, bottom of a trading range, therefore it's an okay swing buy. And then we got 16, low 1 short, breakout, pullback, sell. We may fall below the 14 low, but it's a low 1 near the middle of a tight trading range, late in a bear channel, lasting a lot of bars since yesterday. And that increases the risk that there might be more traders buying below. 17, almost outside up, bull bar closing on its high, middle of the triangle, breakout mode. Breakout above the triangle. 18, good for the bulls, may get a second leg up. And then 19, obviously now we're breaking out above all the bars to the left. Strong enough breakout, probably going to go at least a little bit higher. And therefore, we're probably always in long. Bad follow through 20, bad follow through on 20, but I suspect probably buyers below. 21, bull bar, good for the bulls, probably going at least a little bit higher. And you can see the bulls kept getting bull bars, and they kept preventing bear bars from closing on their lows. 25, inside bar. You can argue possible buy climax and a final flag, 24-25, but because the channel up is so tight, I suspect that even if we pull back, there's probably buyers not far below, and we'll probably go above the 23 high. 26, bull bar. Closing on its high, probably going to go at least a little bit higher. And then 27, a strong breakout bar. Good for the bulls, but big tail above 25, far from the moving average. I suspect we'll probably pull back fairly soon. And then we got a bear bar closing on its low, 28. 28, reasonable for always in bears to exit, but if they do, they'll probably look to buy again after a couple of bars down. And then 29, a bear reversal bar closed at the midpoint. Good for the bears, probably sellers above in a second leg down. But as far as selling it, the channel up is so tight that it makes it a fairly difficult trade for traders to be selling. And then we got a bull bar closing on its low high, 30. Anybody that was short, 29, I suspect they probably buy again above 30. 31, entry bar for the bulls on the high 1 after 30. Good for the bulls, may go at least a little bit higher. And then we broke to the upside on 32, possible wedge with a buy climax bar, 32, probably going to pull back, 33, and that's what we did. 33, bear bar closing on its low. The bears want a parabolic wedge and a reversal down, test of the 29 low and the 24 low. The bulls still see 33 as a pullback, and then they want a strong reversal up. 34, bear bar, weak follow through, probably going to get a second leg up, so probably buyers below. And then 35, probably still more buyers, even if we have to test the 39 low first. Because of 34 and 35, this looks like a bear leg in what will become the trading range. 36, doji, but even if there's sellers above, I suspect the downside's limited. And you can see what happened with 37, 38. 38, a bull bar, but right in the middle of the prior sell-off to the 36 low, probably sellers above and sideways. 39, an inside bar, probably going to get a second leg up after 38, but I suspect there's probably sellers near the 32 high. 40, bull bar, closing on its high, 2 legs up, 38, pause, second, and then 38, pause, 39, second leg up, 40, but I suspect more traders selling 40 than buying it. And then a weak bear bar, 41, probably more traders buying than selling, not a good stop entry sell. 42, bull bar, closing on its high, good for the bulls, probably going to go at least a little bit higher, but right at the high of the day, not really ideal for the bulls to be buying up here. 43, bull bar, but after consecutive buy climaxes, probably going to get bad follow through fairly soon. And then we got a bear bar closing on its low. 45, or 44, strong enough bar, probably at least a small second leg down likely. And then 45, breakout pullback buy, tight bull channel, probably sellers above. And you can see what happened instead. We got a bull bar trapping the bears. And so the bears just sold below 44. Some of those bears ended up getting out above 45. 46, 47, consecutive bull bars, but becoming more climactic, probably sellers above 44 rather than buyers. And then 48, weak high one buy, probably going to pull back. And then 49, another bear bar closing on its low. Good for the lows, good for the bears, probably going to go at least a little bit lower. However, probably bad follow through on the next bar. 50, bull bar, but tail above the bar. I suspect sellers above and sellers at the breakout point, the 48 low. And then consecutive bull bars 50, 51, but on a smaller time frame, 2 legs up, and therefore really not a great bar to buy above 51. And you can see we started to break below the moving average, 53, 54, 53, 54, breaking below the moving average. Good for the bears. May go at least a little bit lower with it being a micro channel, 51 high, 55 low, but probably not going that much lower before traders find buyers below. You will have some bulls buying and scaling in lower. Doji, 56, sign of weakness by the bears, so probably traders buying soon. And then a bear bar 50, good for the bears, but consecutive sell climaxes, I suspect the downside's probably limited. And then we got a surprise breakout, 58. 58, bear breakout below the bear channel, good for the bears, but let's see the follow through. And obviously terrible follow through on 59. 59, reversal bar, strong enough bar, probably going to get a second leg up. And then decent entry bar 60, and then you can see what happened. The bulls got the reversal up to 61, 62. 61, 62, strong enough that there's probably buyers on the first reversal down, and we'll probably get a second leg above the 62 high. But with it being in the middle of the prior leg, I suspect that the upside is probably limited. 63, bear bar, probably buyers below scaling and lower, but the pullback be deeper than what the bulls want. 64, 65, dojis, probably buyers below, but the bears starting to form. Bear bars closing at or below the close of the prior bar, and that increases the odds that you'll have some traders selling above 66, selling above 68, looking to scale in higher. 67, bull bar, breakout pullback buy, probably going at least a little bit higher and above 63, but there will be some traders selling the 63 high and bulls taking profits, and that's what happened with 67. Or 68, 68 outside down, but it's 2 legs down for the bears, and the bulls, they'll see it as a 2-legged pullback and a buy opportunity, betting on a second leg up, betting on a larger second leg up after the rally to 61, weak follow through 69, for the bad follow through for the bears, but probably sellers above. And you can see not a great entry bar on 70, and then the market formed the second leg down with 71, 72, 72, second leg down after the sell-off to the 58 close. but really not a great looking sell, and probably more traders buying right here rather than selling. And you can see that's basically what happened for the rest of the day. 72, 73, 74, 75 pretty much went sideways, and then we broke to the upside on 78. So really not a lot of, really fairly boring afternoon. Not a lot of excitement in here. For stop entries, I thought it was a credible buy above. I know the first credible buy was probably above 5 after three bull bars gapping down in a bear channel over the past couple bars. That made sense if you're betting on a Walmart trade. And then some bears will sell below 8, but probably minor after the 3 consecutive bull bars, 5, 6, and 7. And then as far as selling below 12, again, low probability, but some traders will take it. And then I thought it was probably a buy above 17, higher probability, 18 or 19. And then bulls, they can get out below 28. What do? They probably buy again above 30. And then if they get out below 33, they probably buy again. Really tough call. Some traders, they would not buy at all after this. And you can tell because look what happened. The market sold off back to this price level later on in the day. And that's because a lot of traders who did buy after 37 and 38 ended up scalping out. But bears, if they're short 33, they probably get out somewhere in here. And then bulls, they probably get out below 44. Certainly get out during 49. Bears can sell, or they can sell the pullback. And then 52, I think it's okay for bears to sell, betting on reversal down. But the bears get out above 59. Bulls can buy above 59. And then really a mess. Bulls, if they're long 59, they probably get out below 68. And then that's probably it. And maybe a bear sells below 71, but kind of aggressive. And I think it's at this point probably better to do nothing. Limit orders, I thought buyers below 1 and probably sellers above 9, sellers above 10, but then probably buyers below the 9 low during 13 and 14. I thought probably buyers below 16, but a tough buy. And then probably buyers below 20, but it never triggered. Buyers below 23. And then I thought sellers above 23 during 27. But then I also thought probably buyers below the 29 low at the moving average during 36. And then I thought realistically, even though the rally up was tight to 40, I thought there's probably sellers above the 32 high. So as far as, if you're willing to use a wide stop, it's probably okay to sell once you see 44. Start selling above bars, sell the 45 high, sell the 46 high. Betting on reversal down, sell the 50 high. That made sense. And then probably buyers below 57, but a really tough trade to take after with it being a micro channel down. And then I thought probably buyers below 63, but also probably sellers above 66. I thought sellers above 69, but probably better to wait for the weak entry bar 70. And then I thought buyers on the close of 72, buyers below the 59 low. And then I thought buyers below 77, but those are really late trades in the day to be taking. Buy the close, sell the close. Probably not clear buy the close until probably 19 at a minimum, and then probably buy the close 21, 22. And then, really, you can argue buy the close 27, buy the close 32, but those are really buy the pullbacks. With it being a wedge, 25, 23, 27, 32, it's really better to wait and see what the pullback looks like and then look to buy. And then as far as buy the close, I think it's really tough in here. Maybe buy the close 39, but there's reasons not to as well. And then selling in here is tough as well. So really not all that great. Buy and sell the close. It's better to wait for a couple of legs down, look to fade, and then wait for a couple of legs up and then look to fade back to the mean, the middle of the range. Let me take a look at questions. So what were your thoughts on why you thought the trend wasn't going to last all day? Yeah, I thought the upside, to me, I thought the rally on 19 and 20 and 21 was kind of suspicious for the rest of the day. And when I say a trend not lasting all day, what I really mean by that is kind of more like this. I mean that when the market's doing this, my thought was if a trader just ends up buying anywhere and holding, they're not going to make all that much. It's not going to keep going higher and higher. And you can see it's basically what happened. The market kept rallying, but then it pulled back all the way back to this price level twice. And so when you look at it, bull bar closing on its high, yes. But when you really think about the range, most of it was sideways with a lot of overlapping bars. And the reason I thought that was going to happen is primarily because of the higher time frame context, the market being far from the moving average on the daily chart, getting near resistance, the 6,000 round number, the open of the day being a tight trading range lasting 12 bars. All of those were reasons, the market was overbought on higher time frames. And that's what increased the chances of the market pulling back. Brad, what's the fundamental reason for low one shorts being bought and high ones being sold? Is it the same for all first, second, and third legs? No. So what's the fundamental reason that a low one short gets bought? The answer is kind of simple. A low one, this is a high one buy, bar none. And high ones, if you think about it, are the first retest of an extreme. So the market rallied up to 7. If you're a bull and you bought the 7 close or you bought during 7, how do you feel about the pullback 8 and 9? You're disappointed. And therefore, when the market rallies on 9, 10, or 11 back to your entry, what are you going to do? You're going to be reasonably quick to look to sell out of your longs and exit. Why would you exit? You're going to exit because you're interested in getting out break even. There's going to be other traders, instead of exiting, they'll simply buy more lower. And that's why high ones typically pull back and then lead to resumption. But most high ones, even smaller time frame, even on small scales, bar 30, very tight bull channel, terrible high one buy to sell above on 30. But look what happened with 31. 31 actually pulled back and then rallied. And even here, this high one rallied, it's still pulled back. And that's generally the expectation. The later you get in a high one and the more it becomes similar to a trading range, like 45, the market will rally, but then go a long ways below the 45 low. But ultimately, you can see the 45 high got retested several times. So where do we go tomorrow? I think that we're probably going to get bad follow through. It'll be interesting to see. We're close enough. Maybe we get up to 6,000. We have one final surge to 6,000. But I think outside bar late in a rally, probably going to have more disappointment tomorrow. And therefore, I do not think tomorrow is going to be another strong bull bar on the daily chart. I suspect it's going to be something disappointing. Maybe it rallies and then sells off, forming a bear bar. But we'll see. Even if we start to get to, even 69, anywhere above 69.50, 69.50, 69.70, that'll be you'll have some traders selling and taking profits near 6,000, betting that the market is going to reach 6,000. All right. Thanks, everyone, for tuning in. Hope everyone learned something, and I hope everyone has a great rest of their day.